Hi everyone, and welcome to today's Forex webinar with David and I using the NinjaTrader platform. Thank you for your patience. What? I know. Before we start, as usual, you'll see the disclaimer on the screen. Please just take a second to look at it. I know you have seen this many times before, but as you know, this can be a very risky business, so please don't ever use money that you cannot afford to lose. It's all sort of kicked off a bit in the last couple of minutes because we've had the ECB interest rate decision, which I think is no change. And obviously at 1:30 we've got the Draghi press conference, and it's really for him, it's the countdown to his end of his tenure as the head of the ECB. I think he actually goes in October, so he's never going to do another March press conference, so I'm sure he's looking forward to that. Okay, in this session, there will be David and myself. Here am I on the left-hand side. We're actually broadcasting not from the space that you see in this photograph, but actually we've got some decent broadband at our home up in down in Hampshire, and it's been a very strange day today. Hailstorms the size of tennis balls, which unfortunately ended up on David's head while he was walking the dog. He was not best pleased, but the sun's out and it's a lovely day. Right, what are we going to focus on? Clearly Forex. We're going to be looking at Forex through the prism of volume price analysis. But those of you who know us and who know these books will know that that is just one part of what Forex traders have to get to grips with to become successful. We have to look at the fundamental news, and we also have to understand what's happening in related markets, and increasingly these days, what is going on in the political landscape. And everything, all the methodology, our understanding, our beliefs about Forex and how we think it's the best way to trade are found in the books that you can have. Are available on Amazon, and we've now put them in this little box set. It's not an actual physical box set, it's the digital version of the box sets, but you get 4 books and it's $9.99, I think. Absolute bargain. And we're really pleased that we have been selling a lot of these books lately. Right, this is just a slide from our Forex trading program, and it really explains it gives a visual representation of how we see all the markets interconnecting, overlapping with each other. You've got Forex very much at the center. You've got commodities, equities and bonds, and those of you who come along regularly will know we look at if yields are falling, what are equities doing, what's the sentiment out in the market, what are commodities doing, because all that is played out in the Forex market and reflected in individual currencies and currency pairs. And what we've also done, we've taken this one step further, David and I, or rather David has developed the actual indicators with our software people, and we've put them all together in what we call the currency dashboard. There are 4 elements to the dashboard. On the left-hand side, we've got a CSI, a currency strength indicator, which tells us what's happening with individual currencies, and to show which is overbought, which is oversold, and crucially, which are moving in the same direction. And I'm going to pay a little bit of attention to that today, particularly when you see currency, these lines of the currencies moving in the same direction in a slower time frame, and the implication that that will have if you are trying to take a trade on a faster time frame. And we've seen a perfect example of that today for the euro dollar, because if you are a euro dollar trader, you will know that until this news, at one point it was trading in a 7 pip range, really tough. Now, if you're a very new trader, you're really not aware of the fundamental news, you will be looking at that chart and you'd probably be tearing your hair out. But the currency strength indicator is not just an indicator for overbought, oversold, potential entries of reversals, for which it is, crossovers. It is actually a much more powerful, much more subtle indicator. Then we have a matrix where we look at what are the strongest pairs. We've got an array where this looks at the momentum of the pairs, and we've seen a great example of that with actually the British pound. It's this morning has been characterized by everyone's been focused on the euro, waiting because of the Draghi and everything, but actually there've been some fantastic moves in the British pound. And unless you have 28 charts up or multiple charts up, and you don't have an indicator such as the CSI or an array or the matrix, you really you are in danger of missing these sorts of moves. And finally, we have a currency heat map which looks at the movement of these of the pairs across multiple time frames. So we'll bring them up as we go along to highlight potential entries and you know, what the currencies are actually doing at the moment. So I'm just going to move that out of the way. While I set myself up with my charts, let me just pass you over to David. I seem to have lost my go to webinar. Is it gone? That's interesting. Sorry, I can't even turn myself off, David, actually. That's not much good, is it? Ah, there it is. Found it. Oops. There it is. Sorry. It's this silly little sloppy little symbol that sits out there. Right, I'm just going to turn myself off. I'll pass over to David.
Thanks, darling, and a very warm welcome to you wherever you are in the world. And if you're in Spain, then I suggest it's probably a bit warmer than it is here. At least I hope it is. So welcome, one and all. And good to have you along today. And if this is your first time, I can see we've got some regular attendees in the room. I've got quite a few customers as well. So a very warm welcome to you. And if this is your first time coming along, we run this as a two-hander, Anna and myself. Really just around NinjaTrader and Forex. Anna's on NT7, I'm on NinjaTrader 8. There's a big difference between the two platforms, and it took a monumental amount of effort, not only for NinjaTrader to roll them out, but also for us to port the indicators across from NT7 to NT8. But we've done it. And I have to say, while I'm thinking of it, that as a customer of ours, you never pay us anything more than the initial price of the indicator. That's it. And that applies to, for example, NinjaTrader 7, where we had to do a huge amount of development work importing them over to NinjaTrader 8. You get that as part and parcel of the license. It's just the way we work. Any upgrades, we have platform upgrades constantly all the time on MT4 and also on MT5. And any enhancements we make to the indicators as well, we're always looking to improve, to tweak them here and there, always looking at maybe signals. We get suggestions from customers, which we try and build into the roadmap for the indicators. So we're always moving forward, but you only pay the base price once. That's it. You then get lifetime support, both in terms of technical support and also in terms of upgrades for the indicators, whether platform upgrades or enhancements to the indicators themselves. And finally, if you invest in the full package, you get all the new indicators we develop free of charge. So that's just the way we work. No one else works in that way. That's the way we believe is the right way to do it. I'm going to pass back to Anna. If you have any questions, please just drop them in the chat box. Always happy to answer them there. If they're short questions, if you've got longer questions, we will take them on air and answer them on air for you.
Wonderful. Chapter says, don't worry, just take your time. The markets are always there, and they will be there, certainly in the foreseeable future. Not sure what instruments are going to be there, but you know, as we've seen with cryptos coming along in the last few years, and I'm sure there are other instruments that are going to come along. But a chart is a chart. You know, we've wrote a book about how to trade cryptocurrencies, and they said, well, how do you do it? You do it exactly the same way. It's you read the chart, you look at the price action and volume relationship, and away you go. Anyway, very quickly, the reason I've got as I said, the pound yen, there's a couple of things I wanted to cover. First of all, looking at the CSI in the slightly slower timeframes, and what is the implication when the lines for the currencies are actually going in the same direction. And that was very much a case in the run-up to the ECB, and you'll see that for currency pairs they'll be in a congestion. They'll be trading in a narrow range, in a contained price band, simply because the market is waiting for, as I said, an important release, and we'll certainly get. And then the release comes along. You'll get volatility. Then you'll get some kind of divergence, some kind of move. The currencies will pull apart, and then, you know, and so on and so on. And it happens all the time. But as traders now, it also happens when not necessarily just ahead of news releases, but simply currencies. All markets go into congestion. Congestion phases, if you've read the books, will know. will know that they are we say in the book, they are the spawning grounds of trends. Markets don't actually trend as much as they do as they trade in sideways. That's sideways trading. Sometimes it can be sort of quite measured, quite quiet, but sometimes it can be very volatile. So you can get a trend with volatility. Sorry, a congestion phase with volatility. But at some point, there will be a firm breakout in one direction or another. But the best time to see it, as I said, is ahead of the news. And what happens is with the currency strength indicator, I'm just going to, because are you covering the euro, David? Are you going to cover the euro dollar? Because yeah, you'll see it more. David will talk through the charts on his Ninja Trader 8. But let me just isolate the let's have a look here. Hold on a minute, see if I can. Oh, that's where it's gone. Right. What I've actually done here, I hadn't appreciated my own genius at this, is I've actually put two indicators on one chart. This is the strength indicator with lines, and over here I've actually got the matrix. And for some reason, I didn't think I'd be able to isolate the actual pairs themselves. Let's click on this bit. Here we are down here. There we are. Let me just take out all the others. Take out the, if it's going to work. I don't think it's going to work on this one, David, is it? No, I'm not going to be able to do that. No, I think sometimes I can be too clever. So anyway, let me just do 1 second. I'll be with you in a second. Let me just get another chart up, because this is actually quite important. I should have thought of this before, so apologies. Right, let me just check. When you set up the CSI or any of the quantum the indicators that you apply to a chart from the dashboard, is you can apply them to any pair. I tend to, for whatever reason, I just put them onto the pound Swiss, because then I know if I have them docked down at the bottom, I know that is either, it's going to be a CSI or one of the other indicators from the dashboard. So I just pop that up there. Let's do that just in the indicators. I won't change the background. Let's pop them down. If I can find it. Right at the top, I can see it. There we are. Okay. And I always forget this. With Ninja, you've actually got to add it, unlike the other thing. There we are. Thank you. That's it. Okay, there we are. Pull that up. Actually, let me just make the background black.
You can't toggle on and off on Ninja. You have to do it through the. You can't toggle on the.
Oh yes. David has just reminded me. Sorry, I'm being really dim today, so I do apologise. But let me just put it separately anyway. Let me put 60 on. Right. Okay. Indicators. Right. Here we are. This is how you toggle on and off on Ninja. And I should have remembered. There's too many platforms that I have to. Right. Check that off. And that one will be very, very quick. Oh, Swiss. Show the euro. We want to see the euro. We want to see the pound. I just want to see the pound, the euro, dollar, because it's really important what I wanted to say. And the last one. That's it. Apply. There we are. Brilliant. That's exactly what I wanted. Here we are. This is on the 60. It's just updating at the moment. Now you can see here earlier on where you had these lines moving in the same direction here. That is telling you there is no divergence between this pair, these two currencies. Now we've seen the divergence, because obviously we've had the release. Now, as I said earlier, the implication, and as I said, David will highlight that for you on his charts, is that is telling you very clearly this pair is in congestion. Now, does that mean you step away from it? Because not necessarily, because if the euro dollar is a pair that you are particularly focused on, the spreads are very good, it is one that you've got to know, etc., etc. What this is telling you immediately as you open your screen is that it will set the landscape for the price action. If you know a pair is in congestion, then you've either got to have a tactic, a trading tactic that will take advantage of that congestion phase. Now, this is a congestion phase on 60 minutes. Now, if you're down in the 3 minutes, or you're on a Renko, or you're on a 1 minute chart, a 2 minute chart, knowing that on a slower time frame, it is in this congestion phase. What the congestion phase will tell you, it will give you the bands, the range, the resistance and the support. So you kind of look at it almost like you kind of swing trade it on a faster time frame. And you will know that at some point you will get a divergence, because these currency pairs don't go, these currencies don't track along in parallel forever. At some point you're going to get the divergence. What's going to cause that divergence? Well, in this case it's been the news. So as a trader, first of all, you have to recognize the phase of price action that the slower time frame is in, because that is going to impact the range that pair is going to move in the faster time frame, so you can adapt accordingly. Now, sometimes if it's a very narrow range, and certainly on euro dollar it was very narrow. You're talking about, at one point, as I said, it was 7 pips within a range, and you're down on maybe the 1 minute or even tick charts, and you're trying to scalp 2 or 3. It's going to be much more risky than a congestion phase that is perhaps ranging on a 20 pip or a 25 pip range. You're going to be able, there's less risk on taking that trade, and your support and resistance lines are going to be that much more defined, as it were. Now, at some point, as I said, you're going to get some of the breakaway. However you're going to trade that breakaway, whether you use a VPOC, whether you use a camera, one of our Camarilla indicators that we have here, that's up to you. But that's what I wanted to say about the CSI, that it is not just support, overbought, oversold. Important that that is, clearly, and as I said, while everyone was focused on the euro dollar, and it was trading this slither of price action, there was this fantastic move on the British pound, heavy sell of the British pound. And in fact, I've got the array up here. There it is. I have got it here. This is actually the 15-minute on the British pound, and I have isolated just the pound pairs, and you can see here the pound was being sold off universally in its complex, what we call the complex for the British pound. Now the question is, which was selling off the most strongly? If you were just wanting to sell the pound and select the best candidate, then the array would be something that you could consider. If, however, you maybe just focus on the yen, pound yen, or the cable, what it also tells you, it shows you the strength of the selling against the other pairs. And when it comes to maybe with a pause in the one that you're looking at, if you're on cable, for example, but the selling is carrying on against the Canadian, that's perfectly normal and perfectly logical, because these currencies rotate through the different pairs. But that's what the array will tell you. Moving quickly to the pound yen and the space, the workspace that I have here, I've got the matrix and I've got the CSI here. I've actually got on 60 minutes, and then I've got the 480, which is the 8-hour chart, because of the sessions. I like to see what the price action is, and look at also the volume profiles for the different sessions. Of course, you are always going to see a lower volume stick for Asia. That is normal. That is perfectly acceptable. It's a lower participation. What is interesting to compare is the volume in as London and Europe come on board, and then obviously with New York, they're much more of they're pretty much not the same, but it's the participation level is it's its deepest now as we're coming into New York. Then I've got a daily chart, and I'm actually short this pair at the moment. And if you keep up to date with my blog or Facebook, you'll know that the weakness that came into the pound yen is really premised on these two candles up here. This is Thursday, this is Friday, where we had these very narrow spread candles with pretty high volume underneath it. That was the first sign of weakness. We did have a reversal on the Monday. It was also picked up by the CSI. The last a couple of days, that's Tuesday and Wednesday, we've had narrow spread candles with a fair amount of volume underneath it, and it is an anomaly. And at this point, you think, okay, there's a lot of price support coming in here. It's as if market doesn't want this to, doesn't want to respect this weakness that we saw last week. And here is a case of being patient and waiting. And in fact, today it's had a bit of a push down. The next question is, where is it going? Well, this support line here, 140, 146. So we'll wait to see if that gets there. On the fastest time frame here, I've got the 6 Renko to help with the certainly if you were scalping this. As I said, I'm short this on a long-term basis. Well, what are we looking at? Well, we're looking certainly a move away from 147.10 area, which is the VPOC. We've had the little pullbacks here. We've got the pivots. We've got this strong support areas here, 146.86 here, but it has kept going. The trend monitor is red. The dots are still red. We've had a couple of blues here, but the monitor has kept us in. Bit of choppiness at the moment. So to see whether that is going to carry on higher. Obviously, we've got the yen index here. The yen is moving higher. That's good because obviously I've got to, if the yen is moving, is being bought, then the counter currency is being sold. And on the time chart that we have here, we can see here, this is the sort of pullback at the moment, these little up candles, got a lot of volume under this one. Then it really dries up under here. So you know that's not going to go very far. It's actually around the volume point of control. It's kind of moving sideways, but the up candles is the one that I'm interested in because they're not being supported by volume. Then I've got the sort of doji. I've got a pivot that was fired off here, and we've carried on. But we can see a little bit of price support coming in from the bottom of these candles. We've now had this very wide doji, but not a huge amount of volume underneath it. Again, it's around the volume point of control, which tells me possibly we are going to go sideways on that. And the way to check actually is go back to the CSI over here. Let me just come down and look at this 5 minutes on here, and let me see what this line is. Yeah, well, yes, and that's quite interesting. Let me see. We've got, yes, they're kind of, can you see the 2 lines? We've got the pound and the yen. The yen is rising strongly. It also tells me that it's the move in the yen is not as strong as it is on the pound. In fact, the one to look at would be the euro yen, which I'm sure David will look at as well. And that is what that is telling me. So whilst there is strong yen buying in the market, telling me about market sentiment as well, the move lower in the pound has kind of run its course, as it were. So, that is what the CSI is telling me. It's not just telling me, the potential reversal. So if I were a short-term trader on this, I'd say, okay, there's really strong buying of the yen in the market, not really against the British pound. Let me go and look for something else. And I know it's not against the British pound because the Renko's going in congestion, and we're around the VPOC on the 3 minute. And finally, and I promise I will pass over to David, let's look at some levels. And this is where we introduce I use Camarilla, I use Camarilla, David uses Camarilla. You could use Fibonacci, whatever it is that you like to use, to give you some idea of what is an important level on the chart. This is the important level as far as the down movement is, and this is the S4. And we can see here we had the first break of the S4. The S4 on Camarilla is considered a legitimate breakout. What often happens with S4, it breaks and then it goes back to retest. It just does that. And a lot of traders actually do that and then short once you've had a retest of the S4. And this is where we are at the moment. It did call through. It actually went through the S5, which is the next logical stopping point for this down move. It's pulled back between these 2 levels, and it looks like it's going sideways. So we'll just see what happens. So this is just for short-term scalping, short-term trading. My position is on a longer-term basis. I'm happy to keep that short. I've not come out. I'm looking at 146 as the next kind of stepping point on the downside, and we'll see what happens with that. In fact, what I can do is I can check it on the daily and tell me where I am with respect to the Camarilla. Let me have a quick look. Here we are. Right, here we are. This is interesting from my perspective because what I want, the levels on the daily chart for this indicator, they stay on all week. The ones on the levels given on the faster time frames, they are refreshed every 24 hours. And this is what I like to see. This is the S3. The key level for this is down here on the S4. It's actually slightly below the 146. I think 146 is the first level in terms of the accumulation and distribution indicator here. And after that, we go to 144, but we run into some pretty heavy volume congestion, which may actually slow things up. Right, I'm definitely going to stop now, pass over to David, and you're going to look at the euro, because Draghi is going to be speaking at 1:30. And if you've got any questions or anything I've said, please just drop it into the chat box.
Sorry about that. I was just on another screen. Apologies for the break in silence. There we go. I'm just going to show my screen. Hopefully you can all hear me loud and clear. Yep. And I really just wanted to start here because it demonstrates another facet of trading, which is just being aware of what's going on the different charts, the different indicators, and really putting it all together. It's a reason that you need multiple monitors. You don't have to start with multiple monitors, but you certainly need to migrate towards them over your trading career. What you're looking at here are the three primary indices for Forex. On the left, we've got the yen index. Center is the dollar index, and over on the right, we've got the euro index, all three of them. If I pop this up, just get rid of that thing there. Let's just pop this up full size, make it a bit easier to see. There we go. That's the dollar index. So we're seeing some nice measured dollar buying in the market at the moment. And that, of course, is counterbalanced by the very strong selling of the euro right now. So without even looking at a chart, you'd know straight away that you've got a very strong move on euro dollar. And of course, over on the left-hand side here, we've got the yen index. We've got some pretty strong yen buying coming into the market. Will that be reflected across every single yen pair? Not necessarily. You've got to go and check it out. But at least in terms of looking at the index, you can see where to go and focus your efforts in terms of what is moving, and perhaps thereafter what is moving in the complex to a greater extent, or those to avoid. It's interesting looking at the CSI on ANA's MT5. Let's just go over to the multiple time-based charts. There we go. Got euro dollar up here, as you would expect. Just drop that out of the way. We can have a look at euro yen as well. This is on multiple time frames. I've got 3 minute, 5 minute, 10 minute. Down at the bottom, I've got 30 minute. I've got the Renko running here. I'll just update that in a minute, and then over here on the daily for the euro dollar. So it's basically a euro dollar workspace. But it was interesting looking at the CSI on ANA's MT5. Certainly, I think it was a 10 or 15 minute time frame. Whilst the CSI is fantastic at all this information, it also tells you which pairs are not moving, because in amongst the euro selling off so strongly, I think the other one that was falling in tandem was the Swiss franc. So in terms of a trading opportunity, you certainly wouldn't look at the euro Swiss for the time being, because there's plenty of other opportunities around delivering real solid strong trends, whereas the euro Swiss is probably trading in a range because the two currencies themselves are moving in the same direction. In terms of what went on at the release notification, in other words, just the announcement of the decision and associated, we're now waiting for the statement, which is coming up in 15 minutes. And the reason the euro is now selling off is because the central bank is much more dovish. It's not hawkish. Is that any great surprise? The answer is no, because Europe is now in a relatively parlous state. The German economy is faltering. Italy is teetering on recession. France is a basket. Sorry, it is in recession. France is a basket case. So between the three of them, and particularly Germany, which is the driver for Europe, if Germany stumbles, then that's a problem for the Eurozone en masse, because it is the economic machine of Europe. And if Germany starts to slow down, then that is not good news for Europe at all. And combined with that, of course, you've got the Brexit uncertainty overlaying that. And whether the Europeans like it or not, the UK is important. And I would suggest that we are far more important to them than they are to us. I'm not making a political statement. It's just a fact. of the, when you look at the volume of exports that come into the UK from Germany, it's vast. So there are all sorts of problems in Europe right now. So it's no surprise to see the euro selling off. We suggested in the video we put up earlier on, did a post on TradingView last night as well, similar sort of lines. And now we're seeing that reflected. What did we see at the actual news event? Well, let's go to the 5 minute. There we go. Ton of volume coming in, as you would expect. You know, that goes hand in hand with such a release, massive volume surge. There was some buying in here of the market makers. They came in, they drove the market higher, and then they sold out in the next candle. Volatility on both. So on this candle, we're still trading, or we've just moved outside now. But when this candle was formed, the initial one, you're going to see trading within the range of that candle anyway, because the price action itself closed halfway up the candle. So this is inevitable. But thereafter, what we're waiting for is a breakaway from the range of that candle, which we now have. Volumes have gone back to more average, I would say, in terms of what we expect to see. They're starting, that massive surge is now draining away, and we're starting to see the selling pressure take hold as we anticipated. And of course, what's nice and clear across the time horizons is the trend monitor is bright red on 3. It's bright red on 5. It's bright red on 10 minute. It's now transitioning through on the 30 minute. If I just pop that up full size, that really just encapsulates what we were looking at there. Huge volatility, and we're now breaking away. And if we get a close below this level, then we're on down to the next level. Ton of volume coming in there. And in terms of the daily, this is really what we videoed this morning, short video, and also yesterday, really just to highlight, when you're looking at price action, when you're looking at volume, and when you're looking at the slower time frames, you may well be an intraday trader, but the daily time frames give you some perspective on the expected or anticipated, or what may be likely to happen within the trading session, either to the upside or the downside. The daily chart for euro dollar is really characterized by these efforts to rise and a fall, effort to rise and a fall, effort to rise and a fall. And the tops of these areas are just so important. On this occasion, for example, we had a nice strong up day. We had a little bit of selling coming in here. We had this very strong region of price resistance denoted with the dashed line here on the accumulation distribution indicator. This is traditional price support and resistance based on price alone. Volume over here brings time into the equation, but this is just technical analysis 101 delivered by the indicator. So it's telling you that there's some pretty strong resistance up here because the width of the line is fairly wide. It's an area that's been tested from below several times. As you can see here, it's been tested. This time it got through, but then it was back to testing again. Then we had the next candle, big wick to the upside, lots of volume underneath. Is this looking strong? No, it's looking a little bit weak. Then we get a repeat performance, and indeed you could overlay these two candles on one another and come up with a pretty strong 2-bar reversal based on a 2-day candle of a shooting star, where you're overlaying one price action on another. So basically the price action has risen here, risen further in the following day, and then collapsed back again. So you would have quite a wide body but a very high wick to the top of the candle. This reinforces it again. You've got strong volume coming in, but the market really isn't going nowhere, bashes into the resistance level above, collapses back down again. Is it any great surprise we see this nice rollover and price waterfall? Exactly the same scenario here. It's almost a mirror image, if you will. The market tries to rally. Okay, fine, that's decent volume. A little bit of selling coming in the end of the day, profit taking, fine, whatever. Then we get a down candle on the following day on some pretty strong volume. Overlay those on top of one another, and you've got a 2-bar reversal, something like this, but possibly with a wider body. The following day comes along, higher volume still, tries to rally, collapses back near the open. Following day, exactly the same performance, weakness. All of this is just signaling weakness, 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 weakness written all over it. And now we're starting to see that develop. Trend monitor's now transitioned. We've gone through from the blue, we've gone into the darker red, and we're now coming out the other side in the bright red. What will be interesting now is, given that we've got 7 or 8 minutes to the statement from Draghi. Oh, there has been a statement. Is it? Is there a conference as well? Because that, yeah, there is a press conference. I've got it on the, if you go to Forex Live, if you want to find out an easy place to go to Forex Live, and they have got the, you'll find the video link there underneath one of the more recent posts for the conference itself. Yeah, we should be coming along in about 6 or 7 minutes' time. It's well worth watching for two reasons. First of all, because it will get you used to the language of conference. Well, three reasons really. Secondly, you will start to understand the nuances of language that are used, because it's not just brute force here. There are nuanced terms, there are things that they will hint at, infer, imply, say outright, all sorts of things, and the market reacts to that. And if you have a chart running on a 1 minute time horizon, when someone like Draghi is speaking, or a US Fed member, or the president speaking, whatever, you have that on, you will see the reactions instantly. A particular word is used, and whether the bank is particularly hawkish or particularly dovish. Within one of the things we did in the quantum trading education program actually was to do a year in the life of the Fed, literally document what the statement said, how the market reacted, and the nuanced words that are used to convey whatever the message is that they wish to convey, or to communicate with the market, or indeed to test the market. Because the other thing they also do a lot, central banks, is because central banks don't want to look stupid. They don't want to make a decision and then suddenly find out the market's reacted in completely the wrong way or an unexpected way. So what they will do is they will test the market. They will put out a statement that has various inferences, various words used, and they will judge the market reaction to that. Thereafter, the following session, the following decision, or the following statement, they can then judge at what point they're going to raise rates, lower rates, do nothing, whatever it may be, whatever it is they're trying to find out. They basically test the market through language. That's what they do all the time, either overtly or covertly. So that is what is going on right now, and will be going on in the next 5 minutes. Well worth watching. But the general tenor, the general tone right now is pretty dovish, because purely based on the economic picture at the moment, as I said earlier, it's very, very weak, and overlay that with Brexit, and you really have got a pretty potent cocktail. You know, 2017, coming into 2018, the ECB were looking at a slightly rosier picture. That's all now dimmed, and there's a real prospect that this could get even worse. And with the uncertainty over Brexit and what is likely to happen there, again, it's the unknowns. All of this could become quite a potent cocktail of mix. There are the known unknowns and then the unknown unknowns. I'm sure you remember Donald Rumsfeld, bless his little heart. Let's just pop that down again. So here we go. It's down. He may say something and the market may react very strongly and go the other way. Who knows? But at the moment, that's the way it's going. This is on the Renko. Renko is really, really good to help to smooth out some of the price oscillations, and just to give you a little bit more comfort level in terms of a more even-paced price chart. I've got this set to 1 minute. If I update that, just select that again. Little box comes up down the bottom. It tells me that it's, click on here for a particular brick size. Just wait for that to settle a little. Let's just open that. There we go. And we'll just close that down there so it's out of the way. It's just opening up. There we go. And this, of course, is changing the whole time. The optimal speed that I've just selected, the indicator does it for you. It automatically delivers the optimal setting. In this case, it's gone to 30. That doesn't mean 30 pips. It just means 3 pips. Just move the decimal point back 1 space. But it's delivering the optimal setting right now for this particular pair, for this particular session. And if I do that in half an hour or so, then we might find that that's dropped back to maybe 2.5 or 2. It will all depend on momentum. If there's momentum in the market, in other words, participation, then it delivers the optimal brick size for that particular phase of price action. If we're in a sluggish phase of price action, then that optimal setting should be lower, and it will even everything out. It delivers the optimal setting for you. There's no guesswork. It's not, oh, should I put 2 in or 3 or 1.5 pips? What is it? It does it all for you. Just while I'm here, very quickly, I've also got the... Okay. More QE. Oh, well, there we go. I've just pulled this up on TradingView. I know we're on NinjaTrader, but just to highlight the fact I've got the CSI running on TradingView. I've got the this is on the, what have we got here? The 5-minute here. I've got the 15-minute CSI over, and this is what I was saying earlier on about the choosing your pairs for trading with care, because yes, we've got very strong selling in the euro, but look at the selling in the Swiss franc. You know, it's equally dramatic. So if you're not a euro trader, you want to stay away from the euro for whatever reason, well, you know, go and have a look at the dollar Swiss. I know you're trading inverse euro dollar if you like, but nevertheless, there are plenty of opportunities for Swiss franc. You've got the yen rising strongly. You've obviously got the dollar. You've got the Canadian dollars on a bit of a tear, and now it looks as though you've got the pound starting to turn up after it's been battered down this morning. So there's plenty of opportunity there, and that's the multiple CSIs. This was the heavy selling we saw in the British pound, and this just reinforces another facet of multiple timeframes. Using multiple timeframes isn't just about using it for the charts, it's also about using it for the indicators. This was a classic this morning. This is on 10, 20 and 30 time frame, so a nice even spread of time frame on TradingView. The pound was diving strongly, but it was diving strongly on this one, and this one. And now what you're seeing is you're seeing the visual representation of reversal, whereby it starts in the fastest time frame. In other words, the 10, this is now pretty well developed. We're almost half the way up here. Over on 20, it started, but it's just creeping above the line here of oversold, and we're starting to move up. And over on 30, yeah, we've bottomed out, and now we're starting to tick up here as well. So it's really reflecting the fact that across a pretty wide time window of 10 to 30 minutes, the British pound is now being bought quite strongly. What you've then got to do is, first of all, identify which particular pair you might be interested in, and secondly, then go and look at the complex just to make sure that the pound is being bought universally across the complex and not perhaps just again against one currency pair. Just drop that out the way. Can I pass back to you? Or do you want to carry on this side?
Actually, it's 1:30. You've got the euro.
Okay, I've got the euro dollar up. Okay, we'll just see what happens in terms of the press conference, which should be starting anytime. Right, let's have a look. I had it up here somewhere. Here we are. I've got it on Forex Live. Okay, Anna's going to run the words, and we'll just see what reaction we get in. Well, where do I find the link? I think it was, let's have a look. You can usually find this on YouTube. I believe from memory, don't quote me on this, but I believe from memory the ECB do have their own channel. So you can find this pretty easily. Where are we? I think it's in this one.
Got it. From YouTube. Right.
Yeah.
Should I just come on?
Have you got it on YouTube?
Yeah, I'll just hold on a second. Can I just say something?
Yeah, I'm just going to switch off for a moment.
This is what we did in one of our the webinars that are in the Forex program. Basically, we did a live session with Draghi at his press conference, and what the market will react to are the trigger words. I'm sure you've had trigger words, and you know, it makes it sound as traders are a bunch of snowflakes, doesn't it? But I think every time he used the word uncertain, this is when we did the webinar a year or so ago, the euro kind of dropped 10 pips basically. So we have to sort of, if you listen out, the market will pick up these trigger words, and you know, will react accordingly. Sometimes it's the algos are being programmed in this way. So I'm just going to be listening on my headset as David has got the charts and the Renko, but we can still see it looks quite bearish. He's going to have to say something fairly positive for the market to say, yeah, okay. The statement was very, very dovish. The you know, the any interest rate hikes have been pushed back. the most important part of it is that they are looking for more stimulus. That's more QE. That is always negative for a currency. And to be honest, are we back to the currency wars again? They want a weak currency, makes their exports cheaper. So, and so let's see. So if I listen to that, and do you want to talk through the charts, darling? Is that okay? All right, I'll turn myself off and I'll listen out to what Mario has got to say.
Just back on again. Let's put this down to 1 minute. Just get a quicker fix of price action. There we go. There's 5,000 people watching.
Monetary accommodation, ample degree. Is it going down?
It is. Anna's just listening on the other channel.
Oh, God. Blimey.
A little bit of support coming on that candle. Not enough to turn the market unless there's something dramatic. Pivot to the upside. Doji candle on 1. Got some decent resistance in this level here. Nice shape on the Renko. Let's pull that out. Trend dots and the trend monitor work great on the Renko, really do. Trend dots will always change color first. The trend monitor will always transition second, helping to keep you in. And as Anna said, at the moment, it's in their interest to have a weak currency. We certainly don't want a strong one.
Right.
Is he still talking?
Oh, he'd be on for it. He's reading a statement.
He's reading the statement. Yeah, he's reading the statement. They'll take questions. And sometimes it's not so much what's in the statement, it's when they answer questions, because clearly they don't generally know. Sometimes they do know what questions are coming, but often they don't.
Right. Really, really important.
Hold on. Let me just pass back to Anna. I've got something important to say. But then everything she says is important.
Something really, really important, and this is quite surprised actually. The price has actually reached the this price level. There is a very, very big option expiry today for euro dollar. Let me just double check it here for you quickly. And it's coming pretty close actually. It's at, I'm just looking at Talking Forex. This is something else. I really don't think most market participants thought that would come into play. It's at 1250. It's at 1250, and there's 2 billion of contracts riding on that. That is going to be the New York cut, which is 3 o'clock our time. Yeah, 3 o'clock our time. Yeah, we don't know whether that's going to be what kind of contract it is. Is it a touch, a double touch, a no touch? But given that we are now, well, we've actually, are we down there at the moment? No, 112.50. Yeah, and we're just 10 pips away from it. I wonder actually if the big guns, whoever's, one of those parties to this contract is going to lose a lot of money, right? There's no question on that. And it depends how much they want to spend to actually defend that position. But that depends on the type of contract. Option expiries happen every day. For euro dollar, 2 billion it's big. It's not the biggest it's been, but it's big. And given that, I genuinely don't think most people thought that the price would actually get to 12.50, certainly as a result of the ECB. So what you may also see, regardless of what he says, because of this option expiry, I don't know, it'd be interesting to see. That's another something else we have to factor in.
Thanks, Tony. Just want to see if the yen is still rising. Let's just go and have a look at the indices again. Slowed down a bit. And that's the euro. So it's a question of picking out the most appropriate pair. Is it euro dollar, or is it something else? Euro CAD, euro Aussie, whatever it may be. But certainly as far as the dollar is concerned, that's on the daily, beg your pardon. Let me put that on to 15, so they're all the same. There we are. That's the strength we're seeing in the dollar. So it's it's delivering. It's delivering both sides. You can have trades which deliver on one side, heavy selling of the euro, maybe not so strong selling of the Canadian or the Aussie or whatever it may be. But if you've got strong selling and strong buying working for you, in other words, driving that pair on both sides of the equation, those are going to be the trends that are just going to deliver big time, because you've got forces which are working in opposition, but actually working together to drive in one direction or another. The analogy I always use is two trains on a train track. If those two trains are traveling in opposite direction, the speed or the distance they're traveling is massive. Second by second, it's growing all the time. If they're traveling on the same two tracks, parallel with one another, the differential speed, the differential direction, the differential travel is minor. That's really all it comes down to. It's trying to find those trains which are traveling in opposite directions, because they are going to deliver, and the euro dollar is delivering. That way. Is he still talking? It goes on for hours. Okay. He loves it. He does love his voice. He does love. He's a bit of a showman, and it's all very dramatic and organised, and he does like to put on a bit of a show. So it does go on for a bit. But I think the market reaction is pretty much decided, unless he comes out with something unusual or unexpected, rather. Do you want to? Can I pass back to you?
I'm going to take it back.
Okay. I'm going to pass back to Anna on Ninja 7.
You should be able to see my pound yen, which in fact did actually, if you remember on the 3-minute chart, we were looking at the volume point of control was at this point here. I said it was in a sort of congestion, and we had a little bit of an uptick on the pound, and this is this move higher on the pound. The volume point of control works, as soon as you have the build up of volume, what we call transacted volume, the VPOC will either go up go down, depending on where the price action is going. It's now around the volume point of control again. What's interesting is this is the yen index. It's rising, and it's actually rising quite strongly, which tells me that I don't think market sentiment is too hot out there at the moment. So it's really, you know, this morning it was nice moves on the British pound. We've had the Draghi and the ECB, fantastic move on the euro dollar. I'm actually short the euro dollar, but I've been short the euro dollar from is it from the VPOC on the daily? So it's done me. I think Mr. Draghi is wonderful for my positions, quite frankly. So I'll have a go and have a look and see what I'm up at the moment. But just to remind what I said about the price action on the euro dollar, here we are. There we are. This was from this morning. This was the major option expiries, and also for the other pairs as well for today. And this is this 1250. If it just crashes through, then that's it. You know, whatever has happened. We don't know, as I said, what these contracts, how they've been drawn up. You know, what is their terms of reference: touch, double touch, no touch. You know, when if it's a big number like that and prices around it, you can find a lot of volatility, a lot of price support, or, you know, really a push to either get it through or not get it through. This is from Talking Forex. I know some brokers actually offer this as they wrap it up in the to their live to traders who have live accounts, but you can subscribe to it as well. I don't know where else you can get them these days, the option expires. I know the guys over at Forex Live used to post it, and the guys at Forex Flow do. If you head over to a site called Forex Flow, Brian is there. He used to be at Forex Live. He will also they will also have the options. Option expiries, they bring them out on a daily basis, or certainly the most significant ones. Right, I think we're going to stop there because we've actually got another webinar at quarter past 3, I think. Yes, we're going to look at the indices, which will be very interesting, particularly with the yen rising so strongly. If I just quick look at investing.com, what are they saying? There's the headline for the ECB. It's going to be up slightly. The VIX is, well, it's at 16. It's a little bit higher than it has been. So a little bit of, you know, the complacency that we were talking about certainly last week is kind of coming out of the market. As the VIX rises, you're going to get more volatility, and indices are going to, and stocks will be going down. But we'll see what happens from a day trading perspective later on. It's certainly very tough last week because they may have been going up, but boy, oh boy, in very, very narrow spread candles. So all it remains for me is to thank you for coming along. Very quickly, if I can just highlight again the indicators, you'll find them all at quantumtrading.com. Obviously, this is the one for Ninja Trader. The bundle, the currency dashboards, you can buy individual indicators. You don't have to buy the package or the bundle, but we've bundled the currency dashboard together. If you bought them individually, they come to 770. The bundle price is 497. It really does give you all the information you need as a forex trader. We've just looked at the sort of price action perspective, but it tells you sentiment. It tells you you know, is the market risk on or risk off, and of course it gives you those all important overbought and oversold signals. As I said, you can find them at quantumtrading.com. You can buy one or the complete package. You get 24/7 support, and all, as David mentioned, all upgrades are free. If you do invest in the complete package, you also receive all future indicators for free, and they're all covered by the 7-day money back guarantee. And if you buy one, or you buy one or two, and then you want to upgrade to more, you'll always get credit. You know, you don't have to keep buying them again. So if you start with one and then you want to go to a bundle, we will credit you with what you have spent with us. And finally, this is the education program that we kind of referred to. These are the modules. Really, you know, we really do believe we've put something together for traders, whether they're new traders, they've been trading for a little bit of, a little bit of time. everything you need to know to make a success of this market. And if you want any information on anything we've said, either on the charts or the indicators or the program, please can you just send me an email, anna@annacooling.com, or david@quantumtrading.com. And if you do want to come along in an hour or so, the best place to go is just to go to my site, annacooling.com, and you can sign up there. It's called the Day Trading Room. So, and if you can't find it, drop me an email, anna@annacooling.com, and I'll send you a link from my email. So thanks so much for coming along. Enjoy the rest of the trading day. I'll just quickly see what's happening in my pound yen. There we are. Seems like we're going down. Brilliant. That's what I want. I want the euro dollar down. I want pound yen down as well. And but if we don't see you in inverted commas, you're not joining us for the next session, we will catch you next time. Take care.
Hold on.
Yeah, I haven't closed off.